Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, is joining us to, well, get ahead of today's cash open. Scott, good morning to you. No numbers today at the bottom. Good morning. No numbers today at the bottom of the hour for us to look at, but later this morning, the JOLTS data gets released, the job openings and labor turnover survey. After last week's disappointing jobs report, will this number at 10 a.m. Provide any insight into terms of why it was such a big miss for analysts?
You know, probably not. I think the rhetoric is going to be the same, is that people just don't want to take the jobs that are out there, unfortunately. Everyone's looking for tomorrow and for Thursday, Ben, CPI and PPI. But, this number, though, the JOLT number, it can't just be thrown out. It does. It should shed some light on maybe what happened last week. But I think everybody is really looking ahead to tomorrow and Thursday.
Scott, as you mentioned CPI, PPI, is that what you think's weighing on investors here as we watch some selling in terms of the indices to begin the week? I mean, there's a lot of inflation concerns out there as we've been watching commodity prices on the rise, specifically copper. You and I have talked about lumber, both into all-time highs.
Absolutely, and it looks to me like people are just trying to get ahead of these prints, that they are looking for very, very inflationary metrics to come out here. So I think that's why we're seeing pressure across the board. It's not just one sector or the other. Right now, it's across the board. You've got all the majors are down. And at the same time, the bonds aren't really moving. Rates aren't really moving here. So we're kind of seeing something happen that we haven't seen in quite a while, where the overall equities are not moving in tandem, or I should say opposite of what bonds are doing.
Yeah, I'll tell you what is moving, Scott. I'm sure you've been keeping an eye on the U.S. dollar. We've seen some weakness there. Oh, yeah. Some of the other foreign currencies, which I want to get your thoughts on in just a minute, but first and foremost, the greenback working its way back down towards those lows from January, from earlier this year. We're talking multi-month, multi-year lows.
Absolutely. You and I have talked about that, kind of 88.5 to 89 level. And man, there's lots of headwinds here, and it certainly looks like the pressure that is on the dollar right now, which I know we're going to get into now, coinciding with maybe some strength in other currencies. The dollar certainly looks like it's headed towards those levels.
Let's take a look at it here on the daily time frame. You can see it's rolled over off the 93.50 level. It's a key area of resistance we were talking about. And again, and Scott just mentioned, working its way back down to the 89 level. Scott, you mentioned the 88 level. I want to just real quick take a look at that, because if you zoom out from this daily time frame, you'll see the level Scott was talking about, the lows that we saw back in January, February of 2018. If we get below that, Scott, we're talking about levels we haven't seen since December of 2014. Scott, I wanted to talk a little bit about some of the data out of Europe and what's playing out and developing there. Obviously, vaccines are a major focal point. I heard since the pandemic, the UK, England, the first time that they've reported no deaths related to the COVID vaccine in the last 24-hour period. So obviously one 24-hour period we talk about does not a trend make necessarily, but even in terms of some of the data, Scott, we've been seeing these kind of ebbs and flows. We get optimistic about recovery, and then we kind of get some mixed numbers. Here we can see some of those mixed numbers, for the most part, a little bit better than expected for the German ZEW economic sentiment, and we're talking about the across the board here, the numbers. But for the most part, Scott, I mean, this is what we should be expecting and looking for, not only in Europe, globally, and here in the U.S. as well, this kind of ebbs and flows. And we saw a bit of that, I guess, one could point to in terms of our numbers on Friday.
We did. And, I don't want to say that these numbers are confusing at all, but if we go back just about 4 weeks, 8 weeks even, you and I had the discussion about how, the dollar was maybe the best of the weakest currencies out there. Now, all of a sudden, because we're seeing those vaccines step up, and now we're seeing improvement like the numbers we just saw out of Germany, and we're seeing that elsewhere in the world also. Now the other currencies in the world are really creeping back up, and all at the expense of the dollar. So the dollar is really getting kind of the double or triple whammy here. I mean, the euro is at about a 3-month high here. The Aussie dollar is back to its highs. The New Zealand dollar is back to its highs. And, that's all good news for other parts of the world, that we're seeing them start to catch up with vaccines and reopenings and this, that, and the other. But, it's certainly all at the dollar's expense.
Scott, talk to us in terms of other currencies. You mentioned the Aussie dollar. You mentioned what's playing out here in terms of the euro currency. We've been talking commodity prices. We've been talking crude oil. I imagine we should be watching the Canadian dollar because that's one of the currencies that's been firming up as well and ultimately weighing on the U.S. dollar ultimately as well.
No doubt about it. And what we're seeing with commodities, the Canadian dollar is now at about a 4-year high because of that. So we certainly have to watch that. And it's really amazing, Ben, because, again, I'll go back to the point of, looking at all these currencies, how they have all reacted or acted over the last months while vaccinations have picked up here, reopenings have happened here, kind of provided some tailwinds for the dollar here. But now that the rest of the world, let's say, is catching up in that regard, that's what's really causing the dollar, lows that we're seeing here. But the Canadian dollar here, maybe more so than the rest of what we've been talking about, is just on fire, like I said, at a 4-year high.
Quick look at one of the reasons why. We've got crude oil prices, which have been on the rise. We oftentimes talk about that tie to economic conditions in Canada. You can see the Canadian dollar, which has been moving higher. They tapered their asset purchases recently. Scott, in less than a minute, what are you seeing here in Bitcoin? It seems to find a comfort zone here right now between 45,000 and 65,000. For the most part, smack dab in the middle right now. I'm looking at it exactly in the middle, 55,000 as we speak.
And when we see a consolidation, and it's hard to say that, Bitcoin is consolidating when we're seeing, $2,000-$3,000 moves per day. But like you said, it really has consolidated in a range here. That's usually the precursor of a big move one way or the other. I'm not saying we're getting that right now this weekend, but it's bubbling. Yeah. It's bubbling for one of those moves back down towards that 45 or up towards new breakout levels of 63. That's the history. That's the pattern of volatility in Bitcoin.
All right, you talked about that last time on. We'll continue to look for a big move one way or the other. We certainly are seeing that in terms of the indices. We'll see if that spills over into some of the other foreign markets here, other markets that we watch here. And certainly the dollar is a major focal point for many. And Scott, appreciate you joining us here to help us work through what's been playing out here this morning, get ahead of the JOLTS number, and ultimately talk CPI, PPI, the impact it's having on financial markets. Scott Bauer, the CEO of Prosper Trading Academy. Now that we've covered the fundamentals here.